All right, we want to take you to Wall Street, show you what the Dow is doing today. Ooh, down 715 points. Stocks sharply lower big time today following, first of all, losses in Europe. The bond market signaling a possible recession, or at least an indicator that that could happen. Joining me now to talk about this, David Riley from Strategy Financial Group, to talk about what is going on Wall Street. And I guess the bottom line is there's a lot of uncertainty across the world economies, and Wall Street hates that, right?
That's exactly right, Scott. And thanks for having me here.
Sure.
It's one of those things when we see the inversion of the 10-year and 2-year over the last 5 major market cycles. That's been one of the major indicators that at some point in the next 2 years we might see some type of a bigger economic decline.
Yeah, you talk about that inversion. The last time we saw that was in 2005, I think, and then 2 years later there was the Great Recession hit. So
that's exactly right. Now there's no tried and true predictor. Nothing's ever set in stone. Could happen sooner, and it could be much more prolonged depending on some of the economic measures that are taken, whether it's lowering interest rates or what have you.
Yeah, there's a lot of indicators to figure out whether a recession is going to happen, and this is the biggest one you're talking about?
This is one of the biggest we keep an eye on. It's why we see the reaction in the market today, some of the instability there, the flight to safety. People are buying bonds because they aren't sure what the stock market's going to do, and they don't like that volatility. So now's a great time, a great warning sign for folks that are at home and trying to figure out what they want to do for their retirement or for their investment plan, to sit down with someone that's qualified, that can have a process, track something, test something, make sure that they can evolve with the markets.
If you have your investments in a lot of stocks, is that a bad thing right now?
It depends on where you're at in life. If you're more aggressive and you're open to the risk that involves, it's making sure that you set your expectations properly. When do you need the money? And if you need it sooner as opposed to later, maybe you dial things a little bit more conservative.
And then the China-U.S. trade war, President Trump announced yesterday that he was going to push off the latest rounds of tariffs till after Christmas. Is that going to help anything?
Well, we saw yesterday the market reacted favorably to that, absolutely. It's simply, who knows what or how long this is going to be. We're just uncertain on what tariffs are going to look like. Even if they do put off until Christmas, I mean, that's still a headwind for, the U.S. economy.
Okay, we're out of time, but if you were going to guess what's going to happen tomorrow, you think it's going to be more of this?
I think volatility is in order for maybe the end of the year.
Okay, end of the year. Thank you for joining us. We appreciate it.
Thanks for having me, Scott.